Good evening. Josh here with Dealmaker Nation. It's been a minute, guys. Tonight, we're going to talk about a changing real estate market, rising interest rates, potential global recession on the hook, and what we can do about it as investors. Amazing new strategies that are working right now in 2022 in a market that, quite frankly, none of us have seen before. All of that next. Good evening. Welcome to the show, Alex.
Hey, great to be here. I'm excited to give some insight on everything that's been going on and really why people are here to hear about this property that we just acquired with $250 down. So I'm excited to dive into it.
Yeah, so a lot of people probably saw the headline. They're like, Alex, how can you buy a house with $250? Like, that just seems impossible. Before we get to all that, just real quick, we're just going to tell our viewers sort of where we've been at the last 6 or 12 months and sort of how we predicted the moment of time that we're in right now and why what we're doing, including to get that house for $250, is working at this moment. So take us back real quickly to last January 2022. That's our last flip in our company. We flipped a property down in Orlando, sold actually to Opendoor, which you just read the article yesterday about opendoor.com buying properties. I think they had a net loss for 2022 year to date of like 550 million, maybe falling in the tracks of Zillow.com at this point. So walk us through that. You know, where were we at in January and how does it lead to this moment?
Yeah, so there's a couple things that play into this. And as you mentioned, you know, companies like Zillow and Opendoor have been in that model of kind of buying, putting a little bit of work into properties and reselling. And it's a business model that's been around for many, many years, in generations. And it's kind of come to a turning point right now. And we kind of were a little bit ahead of it back in January. You know, we took down that property in Orlando and you know, fixed and flipped it and resold it. And the out sale of that was in I guess it was actually December of 2021 as we kind of turn the page going into 2022. That was the last time that we fixed and flipped in property. And we kind of realized that, you know, there's some trends that were pointing towards where we're at right now in the market. And so we were definitely ahead of the curve, which is great. Kind of dating up from that point, kind of January 2022 up until I would say about May of 2022 was kind of a period of time where everything seemed great. You know, homes were getting sold real quick on market. The market was quote unquote booming. You know, home prices at that point were at an all-time high, and pretty much every single market at that point. But as we kind of predicted, we started to monitor things. It didn't really start to make an impact until May. But if everyone, you know, if you read the reports, the financial reports, looking what the Federal Reserve was doing, they started to, from about the time, the last week or two of January and early February, you slowly start to see the interest rates start to rise and rise and rise, and it started to creep up. And, you know, there was a little bit of noise about it, and people were saying, well, you know, that's temporary. It's going to come back down. It's going to come back down. And so that's kind of what was going on. And we kind of had a game plan to stay ahead of that.
So Alex, for those of our viewers who don't know who you are, like, you're handling leads in our business every day from Washington, D.C. down to Florida, even Texas. I mean, sometimes you're closing multiple deals a day. I like to call you the king closer of the East Coast. So what did you see leading up to May that made us think like things are on the verge of shifting? And then we'll talk about how that shift has happened.
Yeah. So up until May, like for the first quarter and a half of 2022, things were doing really well. We had gotten to the point where we had a very extensive hedge fund list of over 300 top hedge funds in the country that were buying pretty much everywhere. We were to the point where if it was a good location and the property, didn't need a crazy amount of work, we were buying and wholesaling properties at, upwards of 82 to 85 cents on the dollar, which if you look at kind of the norm for what wholesalers do, that was extreme. And that was kind of at its peak. About the turn, right as we kind of went into May of this year, about the middle of May, actually our disposition team that is in charge of selling the deals has a point of contact with about 5 hedge funds that we primarily use. I mentioned that we have a list of about 300. There's 5 that at that point were kind of our go-to. We got a deal locked up. We would call them, get it sold within a couple hours. It was pretty amazing. It got to the point where within the span of 1 week, and this simultaneously kind of coincided with an uptick in interest rates where the Fed just announced a really big hike at that point. No one really knew where things were going. We got actually an email from 3 out of the 5 major hedge funds at that point that we're working with, saying that they were putting a complete freeze on all their operations, meaning that they weren't going to be buying for the foreseeable future until everything cooled down. And it was at that moment, at this point, you go on all these Facebook groups, you talk to these other investors, you talk to sellers even. They're saying, oh, market's hot, market's hot, market's hot. But meanwhile, while that's happening, we're hearing from these top hedge funds across the country that, we're not going to buy this, we're not sure where this is going. We're not going to buy. And that was, to me, that was the huge first tell that, there was going to be a shift.
We started to see hedge funds either not buy at all, or like if they were buying at like a 4 or 5 cap rate, pull back to like a 6 or even higher cap rate. I think it was in May, Alex, we were saying like, this is a time in the marketplace that as investors, no one's seen before. And that's the following. You have a lot of folks, as many people know, got low interest rates, low interest debt, 30-year mortgages in the last 4, 5, 6 years. A lot of these outstanding loans are anywhere from 2.4% all the way to 3.5%. A lot of great deal makers over the years have always said, Alex, you can either buy a deal either on price or on terms. And up until May, it was all about price because you had hedge funds and everybody else flush with cash, just doing cash deals left and right. We saw this sort of market shift starting to happen back in May. We called it here on Dealmaker Nation. A lot of people hemmed and hawed. We're seeing it firsthand right now. We're seeing prices adjust in many markets across the country. And this is a terms play right now. This is a market where deal makers who understand how to make offers based on terms are going to win. So, Alex, what did we see in terms of post-May? Like, what happened there exactly?
Well, there was definitely a slowdown in the sense it was kind of this initial jerk reaction as everything started to pull back from the investor standpoint. People became really conservative with their numbers, underwriting deals closer to 65 cents on the dollar, opposed to almost 6 weeks before we were selling the same deals close to the high 70s and even upwards of 80%, 80 cents on the dollar there. So there was immediately this jerk reaction. And fortunate enough for, ourselves, we kind of, navigated along with talking to some other experts in this field. We kind of navigated and determined where the right play was and where the opportunity was and where you could win in this current market. And that really came down to creative financing.
I remember telling you in June, like, cause we're running all these digital ads on Google and YouTube and all these different mediums. I remember saying, Alex, like, we seem to be getting a lot of calls for cash offers from realtors. Like, realtors are calling us from like Florida to North Carolina and all these random places. Like, there's something is changing like dramatically at this moment. And what are your thoughts then? Like, so essentially moving forward, we're facing like a price correction in a lot of places. You have people, for example, who need to sell but may not be able to sell, who have these low interest rate loans locked in. And now walk us through the deal we're going to talk about tonight. So here's a perfect example for you guys of how this plays out, how you do terms deals in this market and make it a win. One thing to remember, it's the long-term play where you make your money as investors. The long-term play, it's lower taxes, it's long-term appreciation. And one other thing to keep in mind, the Fed is saying inflation right now is running at 8.9%. A lot of high-level investors say inflation is much higher than that. If we're coming across clients on a daily basis right now, just like the one you're about to talk about, that have loans at 2.4 and 3 and 3.2%, that's historically low. So Alex, let us know, like, what happens with this case we're going to talk about tonight. This individual calls in from Maryland. What does that initial call look like?
Yeah, so I think it would be appropriate to give just a little background on this seller's situation. So first off, and we'll get into why this matters in a little bit. He is a former military individual. He's a working person in the DC area. He bought a house exactly 12 months ago. So he bought a house, I believe it was in mid-October of 2021. He buys this property in Waldorf, Maryland, which for those of you who don't know is about 25 miles outside of DC. The neighborhood that he's in, it's about 20 minutes away from Andrews Air Force Base. It's a really nice white collar neighborhood, kind of picket fence, neighborhood there. He buys this, fantastic property for, I believe at the time it was $460, $460,000. Last year, and he buys it with no money down on a VA loan. So that's pretty standard if you're in the military, or even if you're getting an FHA loan with very low money down. That was his situation. So fast forward a year later, due to work implications and personal matter, he needs to move out of the area. So he's looking to sell this property. At this time, if you look back at 2021 last year, the time that he bought it, the market was at an all-time high. The home prices in that area hadn't hit that peak where that home is worth $460 ever. And so he was buying at an all-time high. He put no money down into it. So fast forward a year later, his principal payoff on the property is $451,000. So he's got almost no equity in it. As we've seen, the home prices have slightly declined. That home is worth probably about $450,000. So the home's worth $450,000. He's got a mortgage balance of $451,000. As you can probably do the math here, he's upside down. If he tries to sell it for $450,000 with a realtor, maybe it sells, but he's going to have to bring money to the table because he's got to pay for closing costs. He's going to have to pay for the realtor commissions. I mean, you're talking about upwards of $25,000, $30,000 or even more, depending on what the fees are looking like. So if he were to sell that home for $450,000, he'd be upside down. There's no way that he's going to want to do that. He's not going to want to lose money on this transaction. So what ends up happening is this. He initially, about a month ago, tries to list this with a realtor. He's smart. He's a savvy guy. He understands the situation he's in. He understands that he does not want to bring money to the closing table. So he tries to be bold, and he lists it for $490,000 with an agent. As you could probably imagine, where this current market's at, it did not sell. It sat there. They did a couple of price reductions, and it came all the way down to $480,000. And it's at that point where he can't come any lower. Realistically, if he wants to get this sold, he's going to need to come down closer to $450,000. He can't do that because he's got no equity in it. His spread of fees between closing costs, commissions are about $30,000. So in order to completely break even, not even put a penny in his pocket, he has to get the full price of $480,000. And in this market, that's not happening. So
Alex, what's the original reaction on that deal? Like, he owes $451, market value is like $450, let's call it right now with an agent. Like, what's our initial reaction on that deal?
Yeah, so he comes to us initially. He calls us and basically, says, hey, listen, I don't know how you can make it work. I don't know if you're going to pay cash for it. I don't really care how you're able to structure it. If you can take over my mortgage or get it paid off and get me out of this property and get it sold, and if I could walk away with maybe $5,000, that would be a huge win for me. And our initial reaction was a couple things. One, And mind you, with this property, I failed to mention this earlier. This property is fully turnkey. Not only is it in a really nice area, but it's fully fixed up to the nines. Brand new, granite countertops, stainless steel appliances. There's not a single thing that you need to touch into this property.
It needs like zero capex for the viewers out there. Zero capex goes into this property.
So fully turnkey. So we had two initial reactions. The first one is, how the hell are you able to buy a perfectly turnkey property for $5,000 right now? That was our first reaction. The second reaction was, should we get into this type of deal right now where you're taking this on, where you're not going to have a lot of equity initially? Is that a risk in this current market? And so those were kind of the things that we were balancing at the time.
So Alex, my initial reaction to the deal, and we're getting leads like this almost daily right now. For viewers out there watching this, we're spending a good chunk of change every day on digital ads across the Eastern Seaboard. And these type of leads, Alex, I mean, every day you're seeing something like this, right?
Especially, I would say, really, it's been the last 6 to 8 weeks. We've seen a huge uptick in this. Yeah. Previously, even from when we started to see a change in market from, I would say, like mid-May up until probably mid-August, or even up until the beginning of September, we were seeing, that really the only there were opportunities like this, but for the most part, like, you just had to get properties for dirt cheap, which, as you guys know, is very hard to come by, especially, ones that don't need a crazy amount of work, trying to get properties closer to 50 cents on the dollar. It really was towards the end of August, September, like the last 6 to 8 weeks, we've seen deals just like this come across our desk. Personally, I'm seeing at least close to 3 to 5 every single week, just like this. Turnkey properties who have bought in the last 24 months, for the most part, didn't put a lot of money down, have almost close to no equity in the property. The property doesn't need any work, but they're in the exact same situation that this seller is. If they choose to sell their property with an agent, they have no equity at all. And, all of their closing costs and commissions, when you subtract it out, they're going to have to bring money to the table. So they're caught in the situation where they can't get this home sold and no one can help them.
And the incredible thing, we called this in June. We called a changing market in June. A lot of people hemmed and hawed. Sellers were in denial pretty much almost all summer, in my opinion. You had sellers holding out for premium dollars. And then, like you said, in the last 6 or 8 weeks, a lot of sellers have come back down to earth. And like, their only result for selling is really to think outside the box. So Alex, what did you propose to this gentleman? I think I remember telling you, like, this is a dead deal, throw it away. Like, this is just trash. Like, forget this. And so how did this progress?
Yeah. So, I mean, the first step before we kind of thought about throwing it out was to get a little bit more information from him. So we wanted to collect all of his mortgage information because we knew if we were going to take this deal on, it wasn't going to be a cash deal. We weren't going to bring $455,000 to the table here. We knew it had to be through the process of subject to. And for those of you who don't know subject to, we plan in future weeks, probably next week or the following week, to go to a more in-depth video of how that actually works. From a very surface level, we're basically taking over their current mortgage that they have. So we're taking it over with the same payments, the same interest rate, the same, principal payoff that it needs. We're just basically taking it over and taking over, all that payments, taking over the liability of it. And while that happens, we're able to, potentially, it depends, how the deal's looking. We're able to give the seller some walkaway money, and the more, the title and everything gets transferred to our name. So through this whole process, we are the owners of this home, through this process. So that's basically at a very surface level how the process of purchasing a home subject to works. We knew that this property in particular, the only way we'd be able to make it work was through that process. So the first step on my end was to collect all of his mortgage information. So sat down and I collected what his full PITI is. So his monthly principal, interest, taxes, and insurance, which for the specific deal, it came out to $2,300. Now that's important. That's really important because this property, straight up as a rental, just as a long-term, 12-month, 24-month rental, rents roughly $3,100, but before management fees and whatnot. So this property already would straight up cash flow. The second thing is there are Airbnbs in these neighborhoods that we did some research. We did, pulled some data on AirDNA. There are some Airbnbs in this area. Taking into account vacancy, the total revenue from average Airbnb in that area is close to, I would say, $5,200. So now, obviously, with an Airbnb, there's more overhead expenses and whatnot. But using our calculators and our numbers, we anticipated it would cash flow at least $1,000 per month. So that's really important taking to this equation, because if you were upside down, I don't know if we would have been able to do it.
And Alex, even after reviewing all that, so market rent's $3,100 for long term. PITI is $2,300 a month. AirDNA is saying like $5,300 or more on Airbnb. I think I remember telling you, Alex, no, it's still a no. I don't see it. Tell the viewers why this is actually a deal, what we ended up thinking further into, and why this actually is a deal. A really good deal, actually.
Well, there's a couple of reasons. The first one has to do with the interest rate on this loan.
Mm-hmm.
On this loan, the interest rate is 2.33%, which is almost a third of what the current market rate is right now.
So he's got 28 and a half years to go, I believe. Yep. 28.5 years to go on a 2.33% interest loan. I'll let you keep going.
Yeah. So, I mean, a couple of things and I'll let you maybe go into a little bit detail about kind of the pay down on that loan. But our initial fear was this. Well, typically on a newer loan, this is only a year. Really, it's a year old. It's got 29 years left till it matures. Typically, the first, at least third, portion of that year goes towards the interest. The principal pay down aggressively gets, thrown in there towards the end. Mm-hmm. And so what we did is, we were fearful that even if we held this for, 3 to 5 years, the principal pay down wouldn't be that significant and we still wouldn't have a lot of equity in this deal. But what we failed to realize and take into account was how low the interest rate was. So we pulled out, a standard amortization calculator and plugged in all the data into it. And what we found, because the interest rate was locked in so low, that the principal pay down was so high yearly, it was coming out to almost $1,000 a month of principal pay down, which is extremely high compared to where everything's at currently. And what that basically meant is, if you're going to hold this for 3 to 5 years, 5 years from now, you're going to have over $50K of equity from pay down. And that's not even considering, with appreciation in the property, the spread that you're going to be able to create here. So right away, we knew that, obviously, given the equity situation, you're going to go into this deal with the mindset of this being a long-term hold, especially knowing that the CapEx on this was going to be pretty low. Once we did that math and realized, okay, you're actually going to be able to create a good chunk of equity here, even with a 3 to 5 year hold strategy, it started to become more and more appealing.
Let's put that in perspective for the viewers, because a lot of investors do a lot of different types of deals, but you can always spin the widget a different way to your liking. But let's talk about this particular widget. We're putting $250 down. We're getting a loan for 28 and a half more years, not in our name. There's no personal recourse. It's paying itself off $1,000 a month and increasing on day one in principal. It's also cash flowing. It's giving us a tax deduction. We don't need to raise any capital from any investors. We don't have to share equity with any investors. We're 100% owners of an asset where we had to have $250 to buy it, plus some closing costs. And also, Alex, tell them how the deal's even sweeter.
Yeah. So first off, how we got them all the way down to 250. So when I was explaining this, that initial conversation goes, well, if I could walk away with, get this mortgage off my hands, get this property sold, and maybe put $5K in my pocket, that would definitely be a win, win for me. At that point, I kind of put them on a hold for a couple of days and kind of put them on ice as we kind of deliberated in the office. And for a second, we were going back and forth. And at one point, it was almost a no for us until we started to, think about it. He actually reached out to us first. I had plans. We had discussed in the office, okay, this actually is going to make sense, especially capitalizing on this market. I was planning on reaching out to him that next day. He calls us out of the blue. I think it was like a Wednesday. He calls us out of the blue midday. I answer right away. I recognize his name. And he goes, hey, I really need to get out of this property. I'm moving into a brand new condo December 1st. I have a date for it. I can't afford 2 mortgages at this point. I need this off my hands. Can you help me? If you can get me $1,000, it's a win. and I sit there and half jokingly, I turn to him. I'm like, listen, at this point, $1,000 is a throw-in at this point.
Yeah.
You don't care about the $1,000. I straight up said that to him. I was like, you don't care about the $1,000. I was like, you want this mortgage off your hands. You want to get out of this financial, dilemma that you're in, and you want this to be a win. If we could even get you a couple $100s, I mean, I don't know if we could do it. It would just make it a little bit sweeter for you. If we could just take over this mortgage for you, that's what would be a win. And he thought about it for a second. He paused and he was like, you're right. And so, I was like, you know what? I'll tell you what, let me talk to my team. At this point, I kind of knew my strategy. I kind of put him on a brief hold, came back to him like two minutes later. I was like, all right, listen, we would do it for, $250 down. And he said yes right away. What makes this sweeter though, is this, as I mentioned, he's not moving into his new condo till December 5th. So we're going to close this month on this property. He needed about a month and a half rent back. We got him to put, when it closes in a couple weeks, we got him to put $4,600 down into escrow at closing to cover the rent back for those 2 months. So in theory, we're putting $250 of our own money down in escrow. He's bringing $4,600 of his own money to escrow so you could rent this property back. So really, when you look at this at a whole, he's paying us for this property.
So Alex, you're basically telling me that we're going to go to closing and collect a check on this is essentially how it works out.
Exactly. And this is not an anomaly right now. There are dozens of these deals every week that we're taking a look at. Some that are even in better locations for Airbnb investors.
Yeah.
There's a lot of opportunity in this current market. It's all about kind of shifting and adjusting your mindset and your strategy and capitalizing on it right now.
100%. And real quick, there's a couple things that you did there that a lot of newer investors, and Alex, you and I see this on a daily basis. I mean, the calls come into our team from all over the country, even from other wholesalers, other investors asking if we're interested. And they do one thing wrong that you and I see it daily. So many new investors focus on the price. You can't understate the fact that, guys, focus on the needs. We knew right away the seller wasn't really concerned about $5,000, wasn't really concerned about $1,000. It was never about even getting $50, really, truly. I actually told Alex, like, why don't we get it down to $250 and make this a podcast out of it? That's exactly what we did. It was never about the money, guys. It was about the needs of the client. The needs of the client are relocation for job, doesn't want to pay 2 mortgage payments, focus on the needs first, resolve that. And, sellers will negotiate with themselves. Alex mentioned a phrase that we use at 3-Step Home Sale almost every day. Put the seller on ice. When you put the seller on ice, what you're really doing, if things are not going according to plan, you're letting the seller a chance to rethink it in their own head, like talk themselves out of it. And Alex, that's exactly what he did. He comes back to you and says, you know what, you're right. Just give me the $250. And oh, by the way, I'll put 2 months of rent in escrow for you too. So guys, rethink the little things. It makes a huge difference. But Alex, what are you seeing right now in this market, if you haven't said it already here?
Yeah, I mean, opportunities like that are left and right now. Yeah. It's all about how you can source those deals and how to fit the needs of the sellers. We could definitely go into depth for an hour or so about how to source these deals, how to potentially partner with us and get these deals for $250. We'll definitely have another episode going next week or in the next couple of following weeks going into detail with that. But it's all about capitalization here, and really understanding kind of where the market's going and what you can do. For this specific example, now this isn't always the case. I would say at least 70% of these deals that we're seeing have been from VA loans, and that is because those are the most common loan where you put zero money down to purchase a property. And when these people are purchasing the properties in the last 24 months, as the prices have started to really heavily inflate, when they're not putting any money down at closing, their principal payoff is all the way at the top at the same purchase price that they bought it. And so as they bought it at the top and they have no equity in it, and now it's come down just a smidge and they haven't had any principal paid down because they haven't owned it long enough, they're upside down on these loans and they're looking for any way out. And where we see ourselves coming in is a solution. We're able to really help these sellers, and that's the most important part. It's about helping these people that are in these unfortunate situations, because they can go to an agent, they can try to sell it themselves. At the end of the day, having to pay these closing costs, having to pay agent fees, they can't afford it. And so we're kind of that solution, that unique solution that's really able to put, leave an impact on them.
So I think to wrap up this half an hour, guys, thanks so much for joining us this evening. But to wrap this up, I remember going back to when I started 08 and 09, the last real estate recession, the Great Recession here in the US. And at that time, what I failed to understand in those years was great investors control property. Real estate recessions don't last for very long. It's normally like 18 to 36 months tops. If you can control properties during that time, a bounce out of a recession usually happens pretty quick. So I don't know how long, nobody knows how long this potential real estate downturn could last, but I do know this. If Alex can control a property with $250, how many guys out there tonight have $250 to buy a property with an underlying mortgage that's at rates we've never seen before, even historically? If you can control property, go through it, the downturn, the upside is going to be really pretty ahead. And better yet, guys, those properties are 100% owned by you. I don't think you need to, well, it depends, but I don't think you need to raise capital to get $250 down on a deal like this one. So one other question, Alex, for our viewers watching tonight, I'm sure there's going to be this question. Can this type of deal be wholesaled to an investor like ourselves?
So the answer is yes. And we actually just did a wholesale deal with this exact same structure. And the way that you do it is it's all about the walkaway money. Not to go off on a tangent about another deal, but we got it under contract with the exact same premises, the exact same structure. It was subject to taking over their underlying mortgage. Mm-hmm. In this circumstance, we were giving the seller $15,000 down, walkaway money.
Norfolk, Virginia.
It was in Norfolk, Virginia, which is an investor haven. The numbers on the deal were fantastic. The total monthly payment was almost half of what it rented for. It was going to cash flow like a machine. So that's the type of deal that other investors in the area wanted. We marketed it to them. We reached out to some of our main VIP buyers in that area. And someone was willing to pay us, or pay the seller in total $25,000 down for that deal. And so that's how we made our wholesale fee on that specific transaction. 10 went to us, 15 went to the seller. I went to the closing table and we both walked away winners. So these structured deals, if you're at a wholesale model, you can continue to work to, maintain your margins where you're at and maintain transactions. But definitely buying and holding this, I like we mentioned, is really the key right now to take advantage of what's going on.
I'm going to make a couple last predictions before we end the night. Back in May, we said, creative finance is probably going to be the wave of the future because all these low interest underlying debt mortgages out there. June, we said, it looks like the market is shifting before anyone said that. The prediction tonight, guys, for anyone paying attention who's, gone into the fine detail of what Alex has told you, one of the greatest transfers of wealth is going to happen in the next 24 months. It's not going to require you to have a ton of money. It might only require you to have some money, but we've never seen a moment in time where you can control properties where people have such low interest debt locked in for 30 years. It's practically like the government is giving you free money. A debt at 3% for 27 more years. is way less than the inflation is right now. So guys, it's all for the taking out there right now. I know a lot of you guys are either leaving this investment arena completely. We're seeing it daily too. A lot of investors are just closing up shop. They're exiting. They're quitting wholesaling. They're quitting flipping. The opportunity, guys, has changed. If you learn the new tools of what's working right now, you will reap those benefits in 24 to 36 months, as long as you're thinking like a longer term investor. So guys, Alex, do you have any final thoughts for tonight?
Yeah, I mean, just really quickly, my final thoughts are reach out to us, reach out to other investors, brainstorm together, put a plan in place in your own structure, whether it's your wholesale business, whether it's your own strategies to invest for the next 24 months. Put a plan in place and execute. The opportunity is there. It's there for you to grab. The deals can be sourced if you're in touch with the right people and know the right strategies. Take advantage of it because, like Josh said, these next 24 months are going to be game changing in terms of transferring of wealth. So I think stay on top of it, and you're going to reap the benefits.
Alex, we're going to get on here and talk about this more in the future weeks ahead. In the meantime, if you guys want to reach out to us, you got a deal you're struggling with, you're not sure how to pitch it, how to structure it, if it's even a deal at all. Clearly, even on cash deals, investors are changing how they're underwriting currently. So in the next 2 weeks, we're going to do 2 topics. The first, how we find these deals. So probably next week, you and I are going to get on here and go into how do we find the deals. And the following week, guys, how we pitch these deals, because you can't just explain the mechanics of what we talked about tonight. You can't just tell someone you're taking over the mortgage and you're going to make their payments. It doesn't work like that. So we're going to tell you how we pitch the deals to the sellers and make it a win-win and provide a solution that works. We will see you on the next one. And thank you all for joining us tonight, guys, on Dealmaker Nation.
Thank you. Take care.
Guys, thanks for joining us on the live show tonight. If you're on Facebook, make sure to join our Facebook group. It's facebook.com/DealmakerNation. Tons of great content in that group, tons of great people. Make sure you're joining the community, join the network, and learning from other like-minded entrepreneurs. Also on YouTube, make sure to subscribe to our channel. You can find it at youtube.com/DealmakerNation. Thanks for joining us on the show